In Massachusetts, the market still leans toward sellers, and the numbers prove it. In Boston, a $720,695 home value index, just 19.0% of listings with a price cut, and a 21-day median time on market set the tone. Start with where we are. In August, the Boston Metro carried a strong seller designation on the Market Heat Index, a signal reserved for the tightest markets. That same month, the Home Value Index in the city printed $720,695, up 1% year over year, a small gain that tells a big story about scarcity. Sellers cut prices in only 19.0% of listings, fewer than 1 in 5, while buyers had just 21 days, the median, to act. In a region where inventory sits far below pre-pandemic norms, that clock matters. Zoom out across Massachusetts for the statewide read. In August, the median sales price for single-family homes reached $680,000, a 4.6% increase from a year earlier. New listings for single-family properties edged higher by 1.3% year over year, but overall inventory still slipped 3.3%, tightening the market even as fresh options trickled in. Condominiums, meanwhile, told a different story. The median price eased 3.1% to $540,000 as condo inventory nudged up 0.9% and new condo listings rose 2.9%. Closed sales reflected the softer cadence, down 4.6% for single-family homes and down 0.5% for condos in August, yet the statewide price floor for detached homes held firm at $680,000. Now frame Greater Boston's pulse. Through July 31st, single-family sales across 139 cities and towns east of Interstate 495 totaled 11,727 for the year to date. That count was up 3.3% from the 11,352 recorded in the first 7 months of the prior year. The median single-family price in that Greater Boston swath reached $805,000 through July, up 4.3% from $772,024 over the same period a year earlier. In other words, more homes traded hands by 3.3%, and they sold at higher prices by 4.3%, even as buyers grappled with financing costs and limited choice. Mark the coastal counterpoint. On Cape Cod in July 2025, 317 homes closed, 251 single-family houses, and 66 condominiums. The median hit $820,000 for single-family closings and $521,000 for condo deals. 1 year earlier, 307 homes sold 256 single-family and 51 condos at median prices of $789,500 and $575,000. That's a year-over-year bump of 10 transactions overall, with a $30,500 lift for single-family medians and a $53,500 drop for condos. Under contracts in July showed the mix shifting. 263 single-family homes went pending and 91 condos did too, a 1.9% dip for single-family activity, offset by a 49.2% jump in condo contracts compared with a year earlier. The share of homes selling over asking fell by 44.4% versus July 2024, while the percentage of listings with price changes climbed 21.3%. And while 707 single-family listings and 212 condo listings hit the Cape market in July 2024 9.1% and 34.9% higher than the prior year, inventory remained less than half of what it was before 2020. Against that backdrop, financing remained a headwind with a shifting breeze. A 30-year fixed mortgage tracked at 6.56% for the week ending August 28th, while local professionals pegged typical 30-year rates closer to 6.75%, with 15-year loans around 5.88%. The range between 6.56 and 6.575% defined the cost of waiting versus moving, and the gap to a 15-year at 5.88% sharpened trade-offs for anyone recalculating affordability. Nationally, 77% of survey respondents in July said it was a bad time to buy, up from 71% the month before, and homes sat a median 58 days on market in mid-July, 1 day longer than the same week in 2019. Against that slower national cadence, Boston's 21-day median underscored how compressed the local timeline remains. Why is this happening? Begin with scarcity and pricing discipline. In August, Boston's strong seller tag didn't come from runaway bids. It came from supply that is far below pre-pandemic averages, paired with restrained price reductions and a short selling window. Statewide, single-family inventory fell 3.3%, even as new single-family listings rose by 1.3% in August, a mismatch that kept pressure on prices. Condos added a touch more slack, with inventory up 0.9% and the median price down 3.1% to $540,000, but the detached market carried the headline at $680,000. On the Cape, more inventory and more price changes lengthened the search, yet calibrated pricing still moved 317 properties in July 2025, including 251 single-family homes at a median $820,000. Interest rates set the second gear. With a 30-year rate straddling 6.56 to 6.75% and a 15-year around 5.88%, buyers ran tighter math, and sellers learned that asking for the moon doesn't guarantee orbit. Share reductions on the Cape rose 21.3% year-over-year in July, and the proportion of sales closing above list dropped 44.4%. In Massachusetts broadly, closed sales slipped down 4.6% for single-family homes and down 0.5% for condos in August Eve, as single-family prices rose 4.6% to $680,000, a tension between budget and scarcity. The third gear is demand patterns, shaped by condition and location. Across Greater Boston, homes in move-in condition and priced with intent still moved fast. Starter homes in the Boston area often start at about $1,000 and remain fiercely competitive, frequently drawing multiple offers and no contingencies, especially in coastal and commuter towns. New construction remains desirable, but limited supply keeps competition strong. That desire for turnkey space blends with new routines home offices matter, and with geography, families still seek high-rated schools, waterfront proximity, and commuter access. As preferences sharpened, sellers who priced realistically found traction. Those who stretched often faced slower tours, more days, and in some cases withdrawal rather than a deeper cut. In that environment, buyers gained leverage to negotiate repairs and reinstate contingencies, a shift that would be unthinkable when 21 days on market felt like 21 hours. There's a fourth gear wealth concentration, and Boston sits squarely inside it. In June, the combined value of U.S. housing reached $55.10 trillion. 9 metro areas each counted more than $1 trillion in local housing wealth, and Boston stood among them with $1.30 trillion, alongside New York at $4.60 trillion, Los Angeles at $3.90 trillion, San Francisco at $1.90 trillion, Washington, D.C. at $1.30 trillion, Miami at $1.20 trillion, Chicago at $1.20 trillion, Seattle at $1.10 trillion, and San Diego at $1.20. Since February 2020, Boston's aggregate housing value grew by $411 billion, a sign of durable demand across 5 years of rapid shifts. Yet in the 12 months ending in June, the Boston Metro shed $3 billion in housing wealth, a modest step down that tracks with broader shifts among the largest markets. Excluding New York's $260 billion gain, the other trillion-dollar metros collectively lost $18 billion over that period. Together, the 9 metros delivered 28.1% of last year's national housing wealth increase, despite holding 31.9% of total wealth, a gap that hints at rising momentum in smaller markets, even as the biggest remain deep liquid anchors like Boston's $1.30 trillion base. Inside that macro structure, the ground truth in Massachusetts was noisy but navigable. Consider Greater Boston again. 11,727 single-family sales through July 31st versus 11,352 a year earlier shows activity rose by 375 transactions, a 3.3% lift, while the median rose to $805,000 from $772,024, a $32,976 increase, or 4.3%. The state's August single-family median of $680,000, up 4.6%, sits below the Greater Boston mark, highlighting how much Metropole can elevate prices. Condos statewide posted a $540,000 median in August, down 3.1%, a divergence that offers entry points for some buyers who might be priced out of single-family competition. On the Cape in July 2025, the $820,000 single-family median stood well above the statewide August median and the Greater Boston year-to-date median, reflecting a coastal premium and the impact of lifestyle demand. The 66 condo closings at a $521,500 median in July 2025 traded off against last year's $575,000 condo median, pulling the average price lower year over year, even as condo contracts surged 49.2%. Pricing strategy, not just pricing level, did the heavy lifting. On the Cape in July, the share of listings that changed price climbed 21.3% from July 2024, and the share closing over list fell 44.4%. Yet 317 homes still closed, up from 307, a 10-transaction gain that shows well-calibrated asks can move volume even when bidding wars cool. Statewide in August, single-family new listings rose 1.3%, but inventory slid 3.3%. That math says the time to contract should stay tight. The Boston Metro's 21-day median underscores it, while the need to nail price grows. In Boston, only 19.0% of listings carried a price cut, tacit confirmation that sellers who enter properly are rewarded. The inverse shows up nationally. In mid-July, the median time on market hit 58 days, 1 day longer than the same week in 2019. That spread 58 days nationally versus 21 days in Boston demarcates two very different risk profiles. Affordability is the pressure point that connects all of it. A statewide single-family median of $680,000 in August sits nearly $240,000, $10 above the national July median list price of $439,990, a premium that compounds when borrowing costs run between 6.56% and 6.75% on 30-year loans. The 15-year near 5.88% compresses interest expense but raises monthly payments, trading future savings for present strain. The national median list price in July 2025 rose just 0.5% year over year, with cost per square foot up the same 0.5%. But in Greater Boston, the median single-family price through July rose 4.3%, 8 times that national increase. In the urban core, the concept of a starter home around $1,000 underscores the mismatch between wages and prices, even as buyers stretch for location, commute, schools, and amenities. That's why agents reported fewer bidding wars this summer, a phrase that translates to a wider spread between list and contract for anything not priced with precision or presented in updated condition. Condition is the second affordability lever because it compresses hidden costs. In multiple markets around Boston, buyers prioritized updated kitchens, renovated baths, and move-in ready floor plans over raw square footage or a particular architectural style. Homes offering first-floor bedroom suites, expanded patios, pools, or water access in coastal communities drew outsized attention. By contrast, fixer-uppers once pitched as opportunity often met, the brick wall of renovation budgets stacked atop 6.56 to 6.75% borrowing costs. Some buyers with the skills or patience leaned back in, but the broader pattern favored good or great condition, a standard that commanded premiums in both offer quality and speed to close. The Cape's 251 single-family closings in July 2025 at an $820,000 median captured that preference. The 66 condo closings at $521,500 likely reflected a broader range of age and condition as price discovery continued. Look closely at where buyers are going. On the coast, towns like Yarmouth and Chatham offered breezy access, postcard-worthy scenery, and community ties that justify an $820,000 single-family median on the Cape. South of Boston, Hingham blended waterfront charm with historic character and commuter reach. To the west, Metro West communities like Framingham stood out for relative affordability and proximity, while Northampton and the Berkshires traded on culture, creativity, and outdoor space. Each of those choices is a price calculation first. The gap between a $680,000 statewide single-family median in August and a $439,990 national list in July 2025 is roughly $240,000 before interest, inspections, and insurance. In that context, Cape Cod's 317 closings in July 2025 speak to how lifestyle calculus overrides rate fatigue when pricing meets the moment and condition clears the bar. The rhythm of the last year clarifies the next turn. Statewide, the August increase in new single-family listings of 1.3% suggests a small but real release valve. The 3.3% decline in overall single-family inventory offset that valve, which is why the median still rose 4.6% to $680,000. Condos widened the aperture, slightly new listings up 2.9%, inventory up 0.9%, enough to pull the August median down 3.1% to $540,000 and to soften closed sale declines to just 0.5%. In Greater Boston, the 3.3% increase in single-family sales through July 31st, $11,727 from $11,352 came with a 4.3% price lift to $805,000 from $772,024. On the Cape in July 2025, pending trends diverged. 263 single-family under contracts down 1.9% year-over-year versus 91 condo under contracts up 49.2%, while 317 closings carried through the month at medians of $820,000 and $521,000. Those lines converge on one conclusion. Pricing strategy is the fulcrum. In Boston, just 19.0% of listings posted a price cut in August. In the Cape, price changes rose 21.3% in July year-over-year. Statewide, condos traded at a 3.1% lower median in August, while single-family homes still advanced 4.6% to $680,000. The smartest sellers are reading those signals. They're choosing a list price that meets buyer math in a 6.56675% rate world and adding value by presenting updated space that justifies the ask. The savviest buyers are combining patience with precision. They're widening their geography, weighing a $520,000 range condo against a $680,000 statewide single-family median, or trading a $1,000 Boston starter for an $820,000 Cape single-family where the monthly payment may pencil with fewer renovation surprises. You can also see the market maturing in the wealth ledger. Boston's $1.30 trillion housing base is part of a 9-market cohort that collectively holds nearly one-third of America's $55.10 trillion housing wealth as of June 10th. But in the 12 months ending in June, those 9 metros generated just 28.1% of the national increase, while holding 31.9% of the total pie. Exclude New York's $260 billion gain, and the group's combined change turns negative by $18 billion. This is not collapse. It is normalization. Boston's $411 billion gain since February 2020, paired with a $3 billion slip over the year through June, is a data-anchored reminder that even storied markets breathe in and out. Price appreciation slows. Negotiations return. The pendulum swings toward balance without crashing through the floor. Under the surface, summer behavior confirmed that shift. In August, Massachusetts buyers faced fewer chaotic bidding wars and more chances to negotiate repairs, inspections, and time. Sellers who priced with intention and prepared their homes' fresh paint, staged rooms, clean inspections saw strong traffic and competitive offers within days. Sellers who overshot were brought back to earth by longer tours, price changes, or withdrawal. With 30-year loans spanning 6.56 to 6.75%, and 15-year notes around 5.88%, buyers are weighing every dollar. That pressure shows up in national sentiment, 77% saying July was a bad time to buy, up from 71% in June, and in time on market nationally, 58 days in mid-July, 1 day longer than the same week in 2019. The Cape offered a live-fire test of this more deliberate market. In July 2025, sellers wrote more price changes of 21.3% year-over-year, and fewer buyers paid above list down 44.4%, yet 317 closings still cross the line at $820,000 and $521,000, $500 medians for single-family and condos, respectively. The pending pipeline held, with 263 single-family and 91 condo under contracts that point to steady late-summer closings. The year-ago listings surged 707 single-family and 212 condo listings in July 2024, up 9.1% and 34.9%, has not yet restored normal inventory. The Cape remains under half of pre-2020 levels. That imbalance preserves a floor under prices even as the bidding fever fades. Back in Boston, the math is just as simple. August's home value index at $720,695, a 1% annual rise, plus a 21-day median time on market, and only 19.0% price cuts equals leverage for sellers who price right. Statewide, the single-family median at $680,000 in August and the 4.6% year-over-year increase prove that baseline demand remains intact, even as closed sales dipped 4.6%. In Greater Boston, the $805,000 year-to-date median through July and 11,727 single-family transactions show momentum across 139 cities and towns east of Interstate 495. Buyers are active, but precise. Sellers are confident, but realistic. That is a healthier market than the frenzy, even if it asks both sides to do more homework. For households deciding between property types, the condo line deserves a second look. In August, the median condo price statewide slipped 3.1% to $540,000, while condo inventory ticked up 0.9% and new listings rose 2.9%. On the Cape in July 2025, condo under contracts surged 49.2% year-over-year from a smaller base, while closings hit 66 at a $521,500 median, down from $575,000 a year earlier. Those numbers suggest that attached units may offer the best balance between payment and place for the next wave of buyers, especially as single-family listings remain chronically short of demand. Geography remains the trump card for value. In coastal pockets like Yarmouth and Chatham, the Cape's $820,000 single-family median buys breezes, beaches, and a community fabric that justifies the premium. Along the South Shore in Hingham, waterfront access and historic character invite bids that travel beyond square footage alone. In Middlesex County, towns like Framingham trade a quick drive for lower price points, creating that blend of affordability and convenience the next buyer pool needs. To the west, Northampton and the Berkshires deliver culture and quiet intangible amenities that cannot be built on demand, which is why limited listings there still spark real competition. Each of these choices is a ratio. A $680,000 statewide single-family median in August against a $439,990 national list in July 2025. A $521,500 Cape condo against a $540,000 statewide condo median. A $1,000 Boston starter against a $805,000 Greater Boston year-to-date single-family median through July. There's a reason the Northeast remains firmly in favor of sellers. In places like Boston and San Jose, competition thrives when inventory stays tight and demand concentrates around jobs, schools, and infrastructure. The Boston Metro's strong seller signal in August aligns with its $1.30 trillion place in the national wealth map and with a 21-day median time on market. Yet this is not a story of runaway appreciation. With a 1% annual gain in the Boston Home Value Index, with statewide single-family medians rising 4.6% in August, and with condos sliding 3.1%, the growth curve is bending, not breaking. The word for that is balance. What comes next? Start with the base case. Through fall, expect the Boston Metro to retain its seller's edge, anchored by 21-day medians and only 19.0% price cuts in August, and reinforced by statewide single-family inventory that fell 3.3% despite a 1.3% rise in new listings. Expect single-family prices to hold near the $680,000 statewide mark in August terms, and for Greater Boston to keep trading at a premium near the $805,000 median recorded through July 31st. On the Cape, anticipate steady closings in a range similar to July 2025's 317 deals, given the 263 single-family and 91 condo under contracts already in the pipeline and the ongoing preference for move-in ready homes. Condos should continue to provide a relative affordability valve, with August's $540,000 statewide median and July's $521,500 Cape median offering alternatives to the $680,000 single-family target. Two watch items will shape the arc. First, mortgage rates. If 30-year averages continue to oscillate between 6.56 and 6.75%, borrowing costs will keep affordability tight and negotiations steady. A decisive move lower would release pent-up demand and pull time on market even shorter, especially in Boston, where the median already sits at 21 days. The 5.8 to 5.10 19-year option will remain a niche lever unless incomes rise or prices ease. Second, listing flow and price discipline. Statewide single-family new listings rose 1.3% in August, condo new listings rose 2.9%, and Cape price changes climbed 21.3% year-over-year in July, while above-ask closings fell 44.4%. If new listings continue to inch higher into autumn while sellers stay realistic on price, buyers will gain a little more room to breathe without toppling the $680,000 statewide single-family median or the $805,000 Greater Boston median through July. There is risk, but it is bounded. If national sentiment stays near 77%, calling it a bad time to buy, and if time on market nationally remains around 58 days as in mid-July, the hesitancy could bleed into Massachusetts, softening closed sales beyond August's 4.6% dip for single-family and 0.5% for condos. If inventory remains below half of pre-2020 levels on the Cape, and far below pre-pandemic in Boston, scarcity could preserve premiums but compress liquidity, especially for properties needing work. And if the trillion-dollar metros continue to contribute just 28.1% of annual housing wealth gains, despite holding 31.9% of the value, the gap may direct marginal growth into smaller Massachusetts markets outside the core. The upside is as simple as alignment. A few more listings, 1.3% statewide for single-family in August, and 2.9% for condos paired, with a smarter list price, Boston's 21-day median and 19.0% price cuts are the benchmark, and a steadier rate, 6.56 to 6.75% for 30-year loans and 5.88% for 15-year. Greater Boston's 11,727 year-to-date single-family sales through July 31st, the $805,000 median through that date, and the Cape's 317 July closings at $820,000 and $500 medians show the path calibrate then close. For clarity, precision, and fewer surprises, let the numbers lead your next move.